Hey everyone, and welcome back to dailycryptotalk.com for your daily deep dive into the crypto market. It's November 21st, 2024. And let me tell you, we got some serious action happening out there today.
Yeah, definitely a day to buckle up. Bitcoin just blew past $97,000, setting a brand new all-time high.
Wow, a new all-time high for Bitcoin. So what's fueling this surge? Is it just hype? Or is there something more substantial behind this move? And what does this mean for you? Don't forget to hit that bell icon in the lower right corner so you never miss a session and can stay ahead of the curve.
Well, a few factors are contributing to this. Firstly, the overall market sentiment is super bullish right now. We're seeing massive open interest in Bitcoin contracts, hitting a record-breaking $63 billion. Open interest, by the way, is basically the total value of all outstanding futures contracts. So this huge number tells us that the big players are stepping in and making some significant bets.
And it's not just the big players, right? We're seeing companies like MicroStrategy continue to double down on their Bitcoin holdings. They just snagged another 50,000 Bitcoin last week, bringing their total to over 331,200 Bitcoin.
You're absolutely right. To put that into perspective, that's roughly 1.5% of all the Bitcoin in existence held by a single company. Clearly, they're incredibly bullish on Bitcoin's future. And remember, this is the same company that faced criticism for their Bitcoin strategy when the market was down. Now their conviction seems to be paying off.
And then there's Samson Mow, CEO of JM3, who's been talking about a Bitcoin supply shock for a while now. With Bitcoin's price surging and the upcoming halving event where the rate of new Bitcoin creation gets cut in half, he's even predicting Bitcoin could reach $1 million. What are your thoughts on this?
He's definitely got a point. A lot of people don't fully grasp the concept of a supply shock. Essentially, when you combine the halving event, which reduces the supply of new Bitcoin with increasing demand from institutional investors and ETFs, you have a recipe for a potential price explosion. It's basic economics. When supply decreases and demand increases, prices tend to rise.
Okay, so it sounds like there are some solid fundamentals behind this Bitcoin rally. But with prices already at an all-time high, is it still a good time to buy?
That's the million-dollar question. While the long-term outlook for Bitcoin seems very positive, it's crucial to remember that the crypto market is extremely volatile. Things can change rapidly, and no one has a crystal ball.
So what's your take on this then? Should we be rushing to buy or should we exercise caution? Hit that notification bell in the lower right corner to stay updated on our latest insights.
Here's the thing. If you're looking at Bitcoin as a long-term investment, then yes, it might still be a good time to buy. However, be prepared for potential pullbacks along the way. It's highly unlikely that Bitcoin will simply go straight up without any corrections. On the other hand, if you're a short-term trader, this might be a good time to take some profits off the table. Remember, you never lose money by taking profits.
So a bit of a mixed bag depending on your investment strategy and risk tolerance. Now let's shift gears and look at Ethereum. It seems to be lagging behind Bitcoin this week, currently trading above $3,100. What's your perspective on Ethereum's current position?
Ethereum is intriguing. Despite its underperformance compared to Bitcoin this week, some analysts believe it's poised for a breakout, potentially reaching $4,000 or even $6,000 in the near future. And there's been a notable outflow from the US Ethereum spot ETF.
So is this outflow a sign of investors losing confidence in Ethereum? Or are they simply moving their funds to capture the momentum in Bitcoin?
It's a great question. We'll have to wait and see how this unfolds, but this is exactly why it's so crucial to stay informed. Things can change quickly in this market, and having access to the latest information can make a world of difference in your trading decisions. Make sure to hit that notification bell so you don't miss our daily updates.
Absolutely. Knowledge is power in the crypto world, especially when it comes to making smart investment decisions. So we've discussed the big players, Bitcoin and Ethereum, but what about the rest of the crypto market? What's happening in the altcoin space?
Well, it's a mixed bag for altcoins. While Bitcoin is hitting all-time highs, many altcoins are actually underperforming.
Okay, interesting. So is this a sign that investors are rotating out of altcoins and into Bitcoin?
It's possible. Samson Mow, who we mentioned earlier, is very vocal about his belief that altcoins are ultimately doomed to fail. He's essentially saying that what's happening to Ethereum now, this underperformance against Bitcoin, will eventually happen to all altcoins.
Wow, that's a pretty strong statement. So is he right? Are altcoins destined to fade away?
It's certainly a perspective and a controversial one at that. While some altcoins might struggle, others with strong fundamentals and real-world utility could still see significant growth. Remember, the crypto market is incredibly diverse, and it's important to analyze each project on its own merits rather than making sweeping generalizations.
So it's not a black and white situation. There's nuance and complexity in the altcoin market, just like with any other investment sector. Before we dive deeper into specific altcoins, let's take a quick look at the news.
That sounds good. What's catching your eye?
Well, there's buzz about Lokai getting listed on Coinbase today, November 21st. Some analysts believe this listing could be a catalyst for a massive price surge, with predictions of a 300% jump.
Coinbase is one of the largest and most respected cryptocurrency exchanges, so a listing there definitely brings a lot of visibility and credibility to a project. This could attract new investors and increase trading volume, potentially driving up the price.
But isn't EFLA a meme coin? Aren't those known for being extremely volatile and risky? Should investors really be chasing a potential 300% pump based on a Coinbase listing?
You're right, meme coins are inherently risky. They often lack the strong fundamentals and real-world use cases of more established cryptocurrencies. Their price movements are largely driven by hype speculation and social media trends.
So while a price surge is possible for EFLA with the Coinbase listing, investors should be extremely cautious.
Absolutely. This is not financial advice, but I would personally be very hesitant to jump into a meme coin solely based on a listing announcement. It's important to look beyond the hype and consider the long-term viability of the project.
Excellent point. Always do your own research and don't get caught up in the frenzy. Now let's talk about another popular meme coin, SHO. They're making some interesting moves beyond the meme world, aren't they?
They are. SHIB developers are actually working on building a crypto valley in the United States.
Okay, now this sounds interesting. What exactly is a crypto valley? What's the goal of this project?
It's still in the early stages, but the idea is to create a hub for blockchain innovation and development, attracting businesses, talent, and investment to the SHIB ecosystem.
So it's about building a real-world infrastructure and community around SHIB, moving beyond its meme origins. That's quite an ambitious undertaking.
It definitely is. Whether it will be successful remains to be seen, but it's a sign that some meme coin projects are trying to evolve and establish themselves as something more sustainable.
It'll be interesting to follow their progress. Now let's move on to DOGE, another meme coin favorite. What's the technical analysis telling us about DOGE's current position?
DOGE has been on a bit of a downtrend lately, but it's showing signs of being oversold. This means that the price has dropped significantly and might be due for a short-term bounce.
So a potential opportunity for short-term traders.
Possibly. But again, meme coins are inherently risky, and DOGE is no exception. If you're considering trading DOGE, make sure to have a clear entry and exit strategy. And never risk more than you can afford to lose.
Sound advice, as always. Now, before we move on to some other exciting altcoins, just a reminder to hit that bell icon below so you never miss out on our daily deep dives into the crypto market.
Absolutely. We're here to help you navigate this fascinating and constantly evolving world.
All right, now let's take a look at another meme coin that's been making waves, BONK. There's some chatter about it potentially reaching $1. Is that even remotely realistic?
Let's take a look at the numbers. BONK is currently trading at a fraction of a cent, and its circulating supply is massive, exceeding 56 trillion tokens. For it to reach $1, its market cap would have to be over $56 trillion, which is more than the entire global economy.
Wow, that puts things into perspective. So while anything is possible in the crypto market, a $1 BONK seems highly unlikely.
It would require an unprecedented level of hype substantial token burns to reduce the supply and widespread adoption on a scale we've never seen before.
So it's probably best to temper those moonshot expectations. Let's move on to a cryptocurrency that's been in the news a lot lately, XRP. With rumors of a more crypto-friendly SEC chair potentially being appointed, there's a lot of speculation about what this could mean for XRP's future.
This is definitely a development worth watching closely. XRP has been entangled in legal battles with the SEC for years, and a more favorable regulatory environment could be a game changer for the cryptocurrency.
So is XRP a hold right now with the potential for a big breakout if things go its way?
That's a reasonable assessment. The regulatory landscape is a crucial factor to consider, not just for XRP, but for the entire crypto market.
And that's where we'll wrap up part one of our deep dive for today. We've covered a lot of ground from Bitcoin's new all-time high to the potential impact of regulatory changes. Stay tuned for part two, where we'll delve deeper into some other exciting altcoin opportunities and continue to break down these complex market dynamics.
We'll also be sharing some valuable trading tips and strategies to help you make the most of this dynamic market, so don't go anywhere.
Ready to dive into crypto? Trade smarter with Binance, the world's top crypto exchange. Enjoy low fees, a user-friendly app, and access to hundreds of digital assets. Whether you're new or experienced, Binance has everything you need. Start trading today. Click the link on this page and get started.
Welcome back to part 2 of our crypto deep dive. We just covered a lot of ground with Bitcoin, Ethereum, and some of the most talked about meme coins. But as you know, the crypto market is vast, and there's always more to explore.
Absolutely. Now, before we dive into some specific altcoins you might want to keep on your radar, let's touch on a concept you mentioned earlier, money flow cycles. You hinted that they might not be as predictable as they used to be. Could you unpack that for our listeners, especially those who might be newer to the crypto space?
Sure. You see, in previous market cycles, we often saw a pattern where money would first flow into Bitcoin, driving up its price. Then, as Bitcoin's price stabilized, investors would start looking for higher returns in altcoins, leading to what's known as an altcoin season.
So it was like a ripple effect, starting with Bitcoin and then spreading to the rest of the market. Exactly. And within that altcoin season, there was often a further flow, starting with large cap altcoins, those with higher market capitalizations, and eventually trickling down to smaller, riskier altcoins.
Okay, I see. So why are these cycles becoming less predictable?
Well, as the crypto market matures, it's becoming more sophisticated and nuanced. Institutional investors are entering the space, bringing with them a different approach to investing. Also, the sheer number of cryptocurrencies has exploded, making it harder to predict which ones will capture the market's attention.
So the old playbook might not work as effectively as it did in the past.
Precisely. We need to be more discerning in our analysis. Just because a particular altcoin pumped in the last cycle doesn't guarantee it will do the same this time around.
That's really important for our listeners to understand. So if these cycles are less predictable, what are some of the factors we should be focusing on when evaluating altcoins in this new environment?
Excellent question. First and foremost, we need to look beyond the hype and focus on the fundamentals. Does the project have a solid team behind it? What problem does it solve? Does it have a real-world use case? Is the technology innovative and scalable? These are all critical questions to consider.
So it's about separating the signal from the noise, looking for projects that are building something of real value. What else should investors be paying attention to?
Well, market narratives are playing an increasingly important role. For example, we're seeing a lot of excitement around AI-related products right now. And of course, meme coins, as we discussed earlier, are heavily driven by sentiment and trends.
So it's not just about the technology, it's also about the story the project is telling and how well it resonates with the market. But how can investors avoid getting caught up in hype cycles and make informed decisions?
That's where thorough research comes in. Look beyond the flashy headlines and marketing materials and dig into the white paper, the team's experience, and the project's roadmap. Engage with the community, read independent analyses, and be wary of projects that promise unrealistic returns.
So do your due diligence, just like you would with any other investment. Now let's zoom back in and look at some specific altcoins that have been making headlines recently. We had a listener question about PEPE and whether it's realistically possible for it to reach $1. What are your thoughts on that?
Well, I hate to burst anyone's bubble, but let's do the math. PEPE is currently trading at a tiny fraction of a cent with a circulating supply exceeding 420 trillion tokens. For it to reach $1, its market cap would have to exceed $420 trillion. To put that in perspective, that's multiple times larger than the entire global economy.
So unless something truly extraordinary and unprecedented happens, a $1 PEPE is pretty much a fantasy.
Exactly. It's important to be realistic about these things. Meme coins can be fun and exciting, but they're also incredibly speculative. It's crucial to manage your expectations and understand the underlying factors that drive a coin's price.
Speaking of meme coins and hype cycles, there's been a lot of buzz around a new meme coin called Lester coin that popped up on the Solana blockchain. What can you tell us about that?
This is where things get interesting. Remember when Litecoin playfully declared themselves a meme coin and even got a Shiba Inu mascot named Lester?
Of course, it was all over social media.
Well, some enterprising individuals took that mascot and ran with it, creating an actual meme coin on the Solana blockchain called Lester coin.
Wait, so is Litecoin officially involved in this project?
Not at all. They've publicly distanced themselves from Lester coin, clarifying that Lester is not their official mascot and that they have no connection to this Solana project.
Wow, that's a great example of how things can get a bit wild in the crypto world. Just because something has a cute mascot and a catchy name doesn't mean it's a legitimate project.
Precisely. This highlights the importance of doing your research and not blindly following the hype. Always verify the source of information and be skeptical of projects that seem too good to be true.
It's a bit like the Wild West out there, so it's crucial for investors to be vigilant. Now let's shift gears and talk about a more positive development: the growth of cryptocurrency ETFs. We're seeing new ETF applications for a variety of cryptocurrencies, including Solana, XRP, HBR, 80, and even Avalanche. What's driving this trend, and what does it mean for the future of crypto investing?
ETFs, or exchange-traded funds, are becoming an increasingly popular way for investors to gain exposure to the crypto market without directly holding the underlying assets. They offer several advantages, such as diversification, liquidity, and ease of access. This makes them appealing to both institutional and retail investors who might be hesitant to dive directly into the complexities of crypto exchanges.
So are we witnessing crypto going mainstream?
It certainly seems like we're heading in that direction. The growing number of ETF applications suggests that traditional financial institutions are taking crypto more seriously. This could lead to increased institutional adoption and bring a new wave of investors into the space.
That's potentially huge for the industry. But let's not forget about Bitcoin, the original cryptocurrency. Its market dominance is now at its highest level since 2021, reaching over 61%. What's fueling this resurgence?
Bitcoin has a few things going for it that solidify its position as the leading cryptocurrency. It's the original, it has the largest and most secure network, and it's increasingly seen as a safe haven asset, especially during times of economic uncertainty.
So is this the dawn of a Bitcoin-only era, as some Bitcoin maximalists have been predicting?
I wouldn't go that far. While Bitcoin's dominance is significant, I believe there's still room for a vibrant and diverse altcoin ecosystem. Remember, the crypto market is still in its early stages of development. We're likely to see many twists and turns, innovations, and disruptions along the way.
So it's not a winner-take-all situation. Both Bitcoin and altcoins can coexist and potentially thrive. But it's important to remember that the crypto market is still relatively young and very dynamic.
Exactly. We've come a long way, but we're still in the early innings of this crypto revolution. And that's what makes it so exciting.
Speaking of excitement, let's switch gears and talk about some practical trading tips and strategies that can help our listeners navigate this volatile market. We've got a lot of new investors in the audience who might be feeling a bit overwhelmed.
It's understandable. The crypto market can be quite intimidating for beginners. But there are simple yet effective strategies that even novice traders can implement to mitigate risk and potentially increase their chances of success.
So let's demystify some of these strategies and empower our listeners with the knowledge they need to make informed decisions. First things first, what's the most important rule for anyone who's just starting out in crypto trading?
One of the most crucial things to remember is this: avoid getting liquidated. It might sound obvious, but you wouldn't believe how many people fall into this trap, especially when they're starting out and eager to make quick profits.
Okay, break it down for us. What exactly does it mean to get liquidated, and how can our listeners protect themselves from this?
Liquidation happens when you're trading with leverage, and your position moves against you so strongly that your initial margin is completely wiped out. Essentially, you're forced out of your trade, often at a significant loss.
So leverage is the main culprit here. It can amplify both gains and losses, right?
Exactly. While high leverage can be tempting, especially for those hoping to multiply their profits quickly, it can also lead to devastating losses if not used responsibly.
So how can our listeners manage leverage effectively?
Discipline is key. Start small, use a low leverage ratio, and always have a clear risk management plan in place. Never risk more than you can afford to lose, and always set stop-loss orders to automatically exit your trades at a predetermined level.
So stop-loss orders are like an insurance policy for your trades.
You could say that. They take emotion out of the equation and help you avoid making impulsive decisions when the market is moving against you. Remember, fear and greed are the two biggest drivers in the crypto market.
So how can we avoid letting these emotions cloud our judgment and dictate our trading decisions?
It's a constant battle even for seasoned traders. The best approach is to develop a trading plan based on objective analysis and stick to it, even when the market is making wild swings. Don't fall victim to FOMO, or the fear of missing out, and don't panic sell when the market dips.
Easier said than done, right? But so important to keep those emotions in check. And it's worth reminding everyone that the crypto market is open 24/7. It's easy to get caught up in the constant stream of information and price movements.
You make a great point. Don't feel pressured to trade constantly. In fact, some of the most successful traders are incredibly patient, waiting for the perfect opportunities to present themselves.
So it's about quality over quantity when it comes to trades.
Absolutely. It's a marathon, not a sprint. And don't forget to prioritize your mental and physical well-being. Trading can be stressful, and it's essential to maintain a healthy work-life balance.
I couldn't agree more. Now let's dive into some specific trading strategies. What's a simple yet effective strategy that our listeners can implement even if they're new to crypto trading?
A classic strategy that even beginners can utilize is the moving average crossover. It's a technical indicator that can help you identify potential buy and sell signals.
Okay, could you break down this moving average crossover strategy for our listeners? What are moving averages, and how do we use them to spot trading opportunities?
Moving averages are simply lines on a chart that represent the average price of a cryptocurrency over a specific period. For example, a 5-day moving average shows the average price over the past 5 days. A 20-day moving average shows the average price over the past 20 days, and so on.
Okay, that makes sense. So how do we use these moving averages to make trading decisions?
One popular strategy is to look for crossovers between different moving averages. For example, when a shorter-term moving average, like the 5-day, crosses above a longer-term moving average, like the 20-day exagony, it could be a potential buy signal. Conversely, when the shorter-term moving average crosses below the longer-term moving average, it could be a potential sell signal.
So it's all about watching for these crossovers as indicators of potential trend reversals. Sounds pretty straightforward. Are there any caveats we should be aware of when using this strategy?
Like any trading strategy, moving average crossovers aren't foolproof. They should be used in conjunction with other forms of analysis, like fundamental research and technical indicators. It's also crucial to backtest any strategy before implementing it with real money.
Backtesting. What exactly does that involve?
Backtesting is essentially simulating your trading strategy using historical data to see how it would have performed in the past. This helps you assess the effectiveness of your strategy and identify potential weaknesses.
So it's a way to practice and refine your strategy before risking your hard-earned money in the real market.
You got it. Remember, knowledge is power when it comes to trading. The more you learn and the more you practice, the better equipped you'll be to navigate the crypto market.
Well said. Now, before we wrap up part 2 of our deep dive, I want to remind our listeners that we'll be back for a third and final part, where we'll continue our exploration of trading strategies and provide even more valuable insights.
We'll also be discussing some important risk management techniques and sharing some of our favorite resources for staying ahead of the curve in this exciting and rapidly evolving market. Don't miss it.
Serious about trading? Then you need TradingView, the ultimate charting platform used by millions worldwide. Discover powerful tools, real-time data, and customizable charts that give you the edge. Ready to elevate your trading game? Check the link on this page to get started free with TradingView today.
Welcome back to the final part of our crypto deep dive for November 21st, 2024.
It's been quite a ride today, hasn't it? We've seen Bitcoin soar to new heights, explored the evolving landscape of altcoins, and even delved into some practical trading strategies.
Definitely a lot to unpack. But before we wrap things up, I want to make sure our listeners are equipped with the knowledge they need to protect themselves in this market. It's all well and good to chase those gains, but risk management is absolutely crucial.
Couldn't agree more. One of the biggest mistakes new traders make is not having a solid risk management plan. They get caught up in the excitement and end up risking more than they can afford to lose.
So let's talk about some practical tips for managing risk. Where should our listeners start?
First and foremost, diversify your portfolio. Don't put all your eggs in one basket, as they say. Spread your investments across different cryptocurrencies and asset classes. This helps to mitigate risk in case one particular investment doesn't perform as expected.
That's a fundamental principle of investing no matter what asset class you're dealing with. What else should our listeners keep in mind?
Another important tip is to only invest what you can afford to lose. Cryptocurrency is a volatile asset class and prices can fluctuate wildly. Never invest money you need for essential expenses, or that would cause you financial hardship if you lost it.
That's such an important point. It's easy to get swept up in the hype and FOMO, but it's essential to approach crypto investing with a level head and a clear understanding of the risks involved.
Absolutely. And speaking of FOMO, it's important to be aware of emotional trading. Don't let fear or greed dictate your decisions. Have a clear trading plan and stick to it even when the market gets turbulent.
So discipline and emotional control are key. What are some other resources or tools that can help our listeners stay informed and make better trading decisions?
There are tons of great resources available online. Reputable crypto news websites, data aggregators, and educational platforms can provide valuable insights and analysis.
And of course, don't forget about our daily deep dives right here on dailycryptotalk.com. Hit that notification bell below so you never miss an episode and can stay ahead of the curve.
Exactly. We're here to provide you with the information and analysis you need to navigate this exciting and sometimes confusing world of cryptocurrency.
As we wrap up this deep dive, any final words of wisdom for our listeners?
Stay curious, stay informed, and most importantly, never stop learning. The crypto market is constantly evolving, and those who embrace this ongoing education will be best positioned to succeed in the long run.
Beautifully said. And remember, folks, this is just the beginning of our crypto journey together. We'll be back tomorrow with another deep dive into the market, exploring new trends, analyzing opportunities, and sharing actionable insights.
Until then, happy trading.